Hi and hello everybody. My name is Gutsche, and I'd like to welcome you to today's session, Basel IV, how to tackle the uncertainty. The presentation or session is structured in 4 parts. The first part we will use to set the scene and talk a little bit what is actually Basel IV, what do we define as Basel IV, what does the market define as Basel IV. The second session has a focus on areas or topics out of the area of CR2. So basically, we will look at what has happened in 2020, more specific in the beginning of 2020. The third part will be more a look at upcoming topics in the area of CR3, which will frame what will happen in the future, where we look at the outstanding Basel IV requirements. And the fourth part, last but not least, will be an outlook where we will see what are the challenges and still the remaining topics that are being outstanding. So the first part, let's open it with the question, what is Basel IV? And I like to use that slide in almost all of my presentation to talk a little bit what is Basel IV. And Basel IV, as it's unofficially, that's important, unofficially called, is the Basel Committee's finalization of the Basel III framework. So please keep in mind, if we speak about Basel IV, the official term, and that's what the regulators use, is not Basel IV, it's still Basel III. So if you look at Basel III and the overall picture, and I think how many years back Basel III actually started, we saw in the beginning a focus on other areas as we see today. And we structured them a little bit using that equation where we use capital divided by RWA equals the minimum capital requirements. And when we see what was formerly the focus, so starting around 2009, so after the first or the last crisis, the credit crisis, let's call it that way, we saw a focus more on the area of capital, where there was a more specification what can be counted as tier 1 capital, what can be counted as tier 2 capital, and so on, so on, so on. Then we also saw more of focus on, or let's say, certain capital buffers were introduced, like the counter-cycle capital buffer, the systematic risk buffer, the capital ratios itself were changed a little bit. But again, this is all stuff that is already being in place. Most of you are already aware of that, so nothing new. But then later on, we saw a focus more on the green part, on what's currently the focus on the RWA part. Of course, not all Basel IV topics are plain RWA related, like NSFR, large exposure, but just to structure it, you see now that there's more a focus in the area of RWA. And when we talk, or that's what is referred to Basel IV, when people talk about Basel IV, they think about this RWA part. And here we also see like 2 waves, that's the left side and the right side. The left side is everything that's related to CR2. CR2 is already being in place and it's mandatory to fulfill in June 2021. So probably most of you are already in CR2 implementation projects. But still, it refers to the Basel IV term. We saw topics like SSCCR, the new counterparty risk framework, FRTB, fundamental review of the trading book, and so on and so on. Many topics CR2 related, but already being in place. Also, on the right side, we see topics that are expected to be in a CR3, not yet released, so they're still outstanding. And here we see topics like the credit risk standard approach, the internal rating-based approach, or also for IB banks, the biggest topic, the output floor. So this is still outstanding. We also see a discussion about how the treatment of sovereign debt, which at the moment is, let's say, put on ice. So the main area is still everything that's in the BCBS 424 paper regarding Basel IV. So Basel IV, keep in mind, RWA related to waves, CRR2 and CRR3. And our presentation today is structured a little bit like that as well. So let's move on to the second chapter. What happened in 2020? The next slides you'll be seeing will be part of or are part of a former BearingPoint Banking Talks presentation, which we gave in the, say, the peak of the first Corona lockdown, where we analyzed all the regulations or regulatory changes that came out in that time. We just used an extract of those slides. If you're interested in the overall presentation, please get in touch with me. So let's jump in. So what we did see in the beginning, or say of this year, we used it to, or show it here with relation to the German stock index. So basically here we see the German stock index by the end of February, and until, let's say, almost mid of March, end of March, we saw a 40% drop in the German stock market. So just for you to get an idea what actually happened that day. And following weeks later on, we saw various publications from European regulators, all more or less related to the finalized Basel III framework. So stuff that already was in place, stuff that will be in place, and stuff that might be in place. So I just picked 3 examples here. The first one was, end of March, 26th of March, by the Bank of International Settlements, or the BCBS, where they probably announced the deferral of the Basel III implementation. So keep in mind, they talk about Basel III, they don't talk about Basel IV, and here was a deferral announced. Just some interesting part, beginning of April, BaFin, for example, set our countercyclical capital buffer to 0%. So basically, they used a buffer that was introduced in the overall Basel III framework to handle those crises, and actually used it at that day. But for us and for today, an interesting population was on the lower right, or the last on the lower right. That is from the European Commission. The amendment of the regulation, and so on, regards adjustments in response to the COVID-19 pandemic that has to become known as the CRR2 quick fix. So overall, in all those, we see that European regulators have acted to reduce the bank's regulatory pressure, to enable banks to support economy maintaining lending levels. And we saw that all of that was related, as I said, to past, will be, and maybe implementations of the finalized Basel III framework, which is Basel IV. Over the course of the presentation, we structured it, all those impacts, how it impacts bank in the area of capital, which is the blue one, capital ratios, buffers, the gray one, and RWA, green one. Today, we just have a brief look at RWA. As I said, if you're interested in more, get in touch with me. But here we saw, still when we talk about the RWA and the impacts of all those regulations in the beginning of 2020, we still have to keep in mind that the overall consensus is that RWA will raise through Basel IV. Mostly affect or concentrated effects we see in the area of credit risk due to the new credit risk standard approach, IRB approach, and output floor. It's heavily concentrated in the output floor. You see that the standard approaches are heavily modified. So, and basically we overall see that RWA will increase. But no, that's the middle area of that. We see a lowering that was tried to achieve. First bullet point here sees that the application of the small medium enterprise and infrastructure supporting factor was amendment. So basically that's something that was planned to be in place with CRR2. you can still, it could still be used, but just earlier. So he was trying to get an RWA release so that banks can use that factor earlier. We also see other areas like that reducing of the qualitative market risk multiplier, more interesting for banks in the area of market risk. And when we move to the right, we also see as additional points, I already mentioned it, that the implementation of Basel IV was deferred by 1 year. And maybe when we speak about the last one, we see that, that the cancellation of the quiz exercise, which was based on June 2020 data, is also cancelled. So unfortunately, it makes it more difficult to estimate the impact, which will be more complicated due to all those new, say, effects that happened in 2020. As I said, this is just a really, really quick look and what had happened on RWA. You can also do that deep dive look into the own funds requirement and the capital ratio requirements. Overall, the message here is due to all that stuff that happened due to Corona and beginning of 2020 or mid of 2020, it makes it even more difficult to get an estimation how this overall framework will impact banks or the financial market. What we can say, on the other hand, is that from a timeline perspective, there's no change, except that so the CRR2 is not delayed due to Corona crisis. Certain topics already said, like the SME factor, can be implemented earlier to provide capital relief. And if we look at the lower left, we see, just to pick some stuff, the SME factor as the last one is one, or for example, the exemption of certain assets, software assets from capital deduction. So just limited changes to specific aspects of the CRR2, but still from a timeline perspective, and there's nothing new from you. CRR2 stays in place. And if you look at the lower right, you see that big topics like SRCCR, the new counterparty credit risk framework, as well as NSFR, are still applicable for banks and still need to be implemented. So on to all topics of CRR2. Now we will move over to the third part, looking a little bit about the CRR3 topics and what will happen in the future. When we looked, or by the time we looked at the first slide with the German stock index, I already said that, but the finalization of the remaining Basel package, so the BCBS 424 to be more specific, was officially postponed by 1 year. But the interesting and important part is that market participants itself expect a further revision of the framework. Just what does that mean? We could say that the Corona crisis could have a significant impact of the final Basel package. And we see that the European Commission is about to revise whether the final Basel package should be implemented as it is. So basically what is going on here. The expectation is that there will be an additional consolidation with organization and member states, and that it's already, or let's say because of the main concern of the proposed output floor. So, and on top of that, it is also expected that there might be some revision by the Basel Committee itself. So just to wrap it up, yes, officially it was postponed by 1 year, but maybe there will be additional amendments to the final outstanding package, what is to be known as Basel IV. So keep in mind time, yes, maybe adjustments to that. What does it mean? This is nothing new, but the overall question is, or the overall thing is that it makes it even more complicated to analyze it. We said, well, what is the impact for banks? We can say that banks with significant impacts and focused business model need to analyze the business and balance sheet accordingly. I think this is an old slide, and we said the relationship between different regulatory KPIs and the interdependencies to economic KPIs become more and more complex. So what does that mean? Just for example, if you do a new trade, how will it impact your leverage ratio compared to RWA? Will it benefit RWA? Will it benefit leverage ratio? So on and so on. So it's just, it makes the overall, analyzation more complex. But what you can say, and I think that is two main topics that you have to keep in mind when talking about Basel IV is, first of all, there's what we tried to say on the lower left side, that the Basel IV impact strongly depends on the bank size. So keep in mind that there's a proportionality principle. So on the bank size, on the business model and the portfolio mix of the bank. So here you cannot make, or you cannot do that anymore, making a general statement saying it will affect this area, that area. Over, let's say, the last couple of years, we saw for each and every bank different impacts in the area of Basel IV. So you just cannot make a general statement, Basel IV impact will affect, for example, real estate business. That would be totally wrong. What we see on the lower right side is also the future impact needs to be quantified under the new rules. Product offering and pricing could change the margin relation of products in the bank portfolio. So also we showed how one and the same product or two products behave differently under old rules and new rules. What you have to keep in mind is think about this slide about the German stock index, all the publications that were out there. Some of them are just temporary, some of them are permanent. So when you analyze certain product offerings, yes, do that under the new rules, but also keep in mind all the changes that happen to the new or upcoming new rules in the future. So again, quantifying the impact for banks itself is difficult and challenging, but we could also look at the markets as well. So European banking markets, which heavily rely on internal models, will face a stronger impact by Basel IV credit risk changes caused by the output floor. So again, output floor is one of the major concerns. And if you make the hypothesis or get the chain of arguments that IRB banks will be more heavily affected due to the output floor, since they have to benchmark the IRB model against the standard approach. And then that's what you see on the left side of the graph. Look, what's the share of risk measured by internal models, and you put a line on the top banks. You see that there's all Northern European countries, and you can say, when you look at what happens to the market, you can see that they will be more affected because they're more extensively using IRB models, so especially Sweden, Denmark, Netherlands, Belgium, Ireland. This is just a look at RWA. Those banks are usually well capitalized, so they can handle the impact. But if you think about the equation before, we have always RWA in relationship to capital and capital ratios. So what here we see an impact on the RWA side. And as a rule of thumb, you can say that banks having a higher share of IRB exposure also show lower average risk weight and therefore are more expected. Still, when you look at the market, you have to keep in mind there's still open the discussion about the treatment of sovereign debt. We had that in the introduction slide. I said that is at the moment still put on ice. But there you can say that countries where governments rely on banks to finance public deficits are affected by the potentially new trade of sovereign exposures. And looking at that overall, we still see that the banking sector faces low and not stable revenues, as well as at the moment a low economic output, which puts initial burden on the banks. So here we also see that Basel IV will have an impact on the overall European banking market on top. And seeing that topic or what will happen, you need to consider all the aspects within that. Let's come to the fourth and last part of our presentation. What are the challenges in terms of Basel IV? So we named the presentation Basel IV. That's all I need to how to tackle the uncertainty. And to tackle the uncertainty of Basel IV's future impact, banks have to analyze the strategic and operational challenges already today. We structured it in two parts. The left side are areas which are strategic related. The right parts is areas that are more operational related. If you look at the left part, the strategic, we see challenges in the area of quantification, business model adjustments, collateral management, and internal models. And if you look on the right side, the operational challenges, we see challenges in the implementation of new methods, design of new processes, ETL data flow, and reporting. Let's dive a little bit into it. From the quantification, I think the impact assessment of the Basel IV regulations on the bank's portfolio is important. But also keep in mind the quantification of potential amendments to the final framework. Yeah, we said that currently there's a discussion of the last and outstanding package to be amended. If you quantificate it, keep in mind what couldn't be there in certain scenarios. From business model adjustments, yes, you need to analyze the current business model fits to the new regulations and define a definition of reasonable adjustments in the product portfolio in line with new regulatory changes. So see how your business model still behaves to those new regulations. Third, the area of collateral management, analysis of the current collateral management agreements, optimizing of collateral and collateral transfer. Just keep in mind, for example, if you are an IRB bank, that you can use certain amount of collateral in your IRB approach. But if you later on have to benchmark that IRB approach against the standard approach, which you have to do because you're benchmarked against the output floor, which is using the IRB approach, you might see that something collateral you can use on IRB is not usable or cannot be used under the standard approach. That's also the strategic challenges in the area of internal models, quantification of the efficiency of your internal models in light of the output floor. That was also in terms of the collateral. I just gave an example. Think about it. How efficient is it? And the recognition versus higher coverage support the strategic decision here for your internal models. That's so on. A quick look at strategic. When we look at operational, we can look at the implementation of new methods. So think about that the standard approaches nowadays will be mandatory for all banks. Standard approach credit risk even for IRB banks, since they are benchmarked against the standard approach or against the output floor. As a CCR, the counterparty risk framework, think about even if you use an internal model to quantify your, for example, counterparty risk exposure for certain, Like, for example, for large exposure, you still need to use a modified version of the standard approach and cannot use your internal models. Design of new processes, just here in the area of the credit risk standard approach, think about what is meant by due diligence process for rating, what does that mean for your bank, how can you do the LTV calculation, how can you identify a cash flow dependency for your LTV calculation, and what do you need to forecast and simulate all those and new calculations. So keep in mind, there are a lot of detailed questions in the finalized approach. Think about that, how you can handle them. ETL data flow challenges, identification of additional data sources. There are new a lot of data requirements. See that they will be able to get into the reporting systems at the last end of your ETL line. You need to have amendments to the data sources and definitely adjust, or what you have to do is adjusting a lot of new interfaces for all the approaches around Basel IV. And last but not least, reporting. Think about the current and future reporting, the adjustment to the data point model, like DPN updates. And don't forget the granularity of the templates, which in the end have become way more granular as they are at the moment. So also what we like to add is that in our experience shows that managing the complexity of Basel IV is also one of the key challenges of our customers. We call it like fit for Basel IV, manage the complexity. And we structured it in 3 areas. It's the green one, understanding, blue one, reacting, and the gray one, which last but not least leads to performing. We took certain examples or real life examples in that way. And for understanding, let's take the first one, was with a large bank that had a focus on asset management, showing that a focus on asset management. And they focused problem of the complex integration of new approaches. Yeah. So how was the reaction? In the end, we set up an agile project structure. We don't do it the classical waterfall way anymore. So basically we use new methods and project management to react to that complexity. We didn't use classical Scrum approach. Well, it was more sprints were a little bit longer, but still we went all the way from sprint planning to like a recap of the sprint and using certain agile method and boards to tackle that issue. And at the moment, I can say that this is a really good approach. The project is doing very, very well compared to waterfall projects on the other hand side, because we can react also to, let's say, not uncertainties from the regulation, but uncertainties to, say, finalization of certain softwares that are being used in the area of Basel IV, and they are still outstanding. So we can use those little sprints to adapt to that. The second one was a specialized private Dutch bank. Here was the issue that getting the picture is difficult, way too many stakeholders involved, and here classical saying just break it down. And one approach that was used is like we refer to it one as many, or teacher basically just try to get that knowledge in there and everybody understands the relation between, for example, the standard SCR approach, counterparty credit risk approach, to FRTB, to large exposure, to leverage ratio. So everybody, even from different departments or different teams, is understanding what is the requirement and just try to spread it out and make little problems out of it, instead of just one big one. And third, but not least, what with one of Germany's largest banks, they said that the new data requirements were overwhelming. That was a long time ago already. And basically what we did there was just performing a quick impact study, or like doing an impact study where you actually can see all the data. This is first of all missing in your regulatory systems. and also missing in your front office system. So you're already well prepared in that area. So that's it about today's session. Thank you very much. As I said, if you have any more questions, feel free to contact me. My contact details are in the upper right. Unless then, I wish you still fun with the RegTech convention in this year's virtualized form. Thank you very much, and bye-bye.